episode 167 of Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risk and seize opportunities. Learn more at futuresfundamentals.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudelli sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudelli.
Hello, everyone, and welcome to the newest episode of Futures Radio Show, where we will highlight our favorite moments of the show over the past month. But before we get started, I want to thank all of our sponsors, CME Group, Trading Technologies, and Top Step Trader. So without further ado, let's dial into those top moments of the show this month. Terry, welcome back to the show.
Anthony, thank you for having me.
It's year 10 of GFLC. It's the best financial conference in the industry. Tell me why you guys started GFLC.
You know, Anthony, we started this 10 years ago, and we just wanted to have something a little bit different than the customary conference where, you know, there was 1,000 vendors and people that were just trying to sell clients different programs or different applications to the marketplace. And we wanted just to have a place where we could bring in high-end speakers that you could never see at another conference and just have it for clients. And we've been able to accomplish that over the years. And, you know, like I said in my opening remarks yesterday, it's the only conference that someone said to me, it's the only conference you can come to where a panel member would be a keynote speaker at any other event. So to me, that's a real compliment to the conference, and that's what we strive for every year. So that's really why we decided to put this together.
Yeah, well, fantastic idea.
Thank
because
you.
it's the most fun and it's the most insightful conference I ever attended. Now, last year at this time, you and I were speaking, and you were just starting your new role as CEO of CME Group.
Yep.
Busy year to say the least, Terry. Talk to us about your first year as CEO.
Yeah, busy year. I mean, obviously, I've been chairman of the company since '02. I took the company public, and then I assumed the role of CEO last year. So it's been a full year that I've had both roles now, and it has been a busy year. So, you know, Anthony, what I really focused on are looking at things that don't work, and it doesn't mean they were wrong at the time, but I was looking at things, you know, you can't keep funding operations that are not successful forever. So what we did was we created liquidity around the clock when it comes to our Globex system. So that allowed me to close down a brick and mortar in Europe and free up a tremendous amount of capital. And that goes back to our shareholders. And it made us much more efficient. So that's one thing that I've been focused on. And then obviously we had a huge investment in Brazil, and it has nothing to do with the Brazil exchange or what its valuation is. We just didn't have any commercial agreements with them anymore. So, you know, for me, my shareholders can invest their money the way they want to. I shouldn't be making stock transactions for them. So I wanted to liquidate that and return that capital. Then also the biggest part of what I've been focused on this year, Anthony, is the client. And it's always about the client. I tell my shareholders all the time, I got to make sure that I focus on the clients. And we're looking at new ways, bringing new participants into the marketplace. We've been really successful, especially in our energy asset class. And then, of course, throughout the other parts of CME Group. So really focusing on the end user client.
Well, let's talk about something that I'm most excited about, Terry, and that's the arrival of Bitcoin futures. Why did CME decide to launch Bitcoin futures?
So I was sitting around with my team one day, and you know, obviously Bitcoin's been in the news, you know, pretty much for the last 9 years. I think it's 9 years old now. Came out at 8 cents, and we didn't do it because of a valuation play or anything of that nature. It's just one of those things that it appears to be an evolution in the way commerce is being transacted. So whether it's Bitcoin or something else, you know, I thought it was important for us to be a part of it. So we made the decision to go launch Bitcoin futures. Now there's many other cryptos out there that you could probably think about, but for me, this was the one that was getting the most amount of attention. And I don't know if it's going to work or not, but I do know one thing. If you take our way of doing business with our systems, our safeguards, our margining, our mark-to-market, all the things that we bring to the marketplace, limits on positions, intraday limits on trading. These are all things that hopefully this asset class will trade, and if it is an asset class. If not, no harm, no foul.
You just mentioned limits. I know that there's limits down. You talked about those already. Was it 7, 13, and 20? Is there a limit up to the upside in Bitcoin?
Yes. Well, there'll be limits on both sides of the equation. So yes, there is limits to the upside and to the downside. And we haven't, I don't know if we completely released the 20 to 30% intraday limits, so off of the last price. So we're still analyzing what those intraday limits are going to look like.
When do you see the contract going live?
I'm hoping to have it approval through the self-certification process at the CFTC, and hopefully have the contract up by the end of the year.
So how do you think that blockchain technology is going to change the nature of trading?
I don't know if blockchain technology is going to change the nature of trading. I think when you look at blockchain, I think of it as more of efficiency on the back office side of the equation. So it can create more efficiencies with different processes that we do today in the back office. And that's kind of where we see it being used more often. So even on our Bitcoin, so when you look at Bitcoin, we're going to have it centrally cleared. We won't use blockchain in the wallet system like they're doing today.
Well, getting back to Bitcoin futures, do you have any concerns with the use case of the underlying market?
I think there's concerns all the time when you listen to something new. We've done a lot of research on this product. It's gotten a lot of good press and a lot of bad press. So we'll have to be very cautious in how we do it. And I think some of the things that I outlined earlier about what we're going to deploy towards Bitcoin with CME's regulatory oversight and the government oversight is a lot different. So yeah, there's always concerns, but I'm sure there was concerns when in 1972 when Leo and others listed the IMM, the first financial futures to be traded. So there's always concerns when new products come out.
Now, is CME using or investing in any blockchain technology?
We have a small investment in the blockchain technology through our venture group, but we're not using it right now. A lot of folks aren't using it yet. I think they're still trying to get their arms around how they want to deploy it into their businesses. So, we want to stay close to it. If it creates efficiencies, we'll be a part of it. And yes, we do have a small investment in blockchain.
Right now, Bitcoin is open 24/7. What's going to be the hours for Bitcoin futures?
Right now, I think we've already announced that there'll be standard CME hours, which will be, we close down a half hour every day for refresh our systems, and then Saturdays are no trading, and then we reopen at 5 o'clock on Sunday. So right now, our objective is to have the same hours for Bitcoin.
So basically, on a Sunday night, we could open up a limit up or a limit down, and that's going to be 7%?
No, we didn't say what the percent's going to be yet, but it could be whatever the percent is, up or down.
Whatever the percentage would be then. Okay. Any possibility of any other new cryptos in CME's future?
Anthony, I think you have to always be open-minded about new products and what's going to happen. But right now, as I stated earlier, Bitcoin seems to be getting the most amount of attention. It's not too different than when you look at phones today. Apple seems to have a pretty good hold on the phone business, and a company like Google comes in with their product, and it's hard for them to get more traction. And it's no different than Facebook having the market on social media, and then Google tries to get into that marketplace. It's a little different, so everybody has their niche. I'm not saying that's going to be the same with the cryptos, but right now it seems like most of the attention is focused on the Bitcoin.
Yeah. Last question for you, Terry. I know you're busy.
Sure.
You're a trader at heart. And I know you're always watching the markets. What are you watching these days?
What I'm watching, Anthony, a lot right now is retail, and retail concerns me a lot. So this is not any particular product. I'm just looking at, there's 54 million jobs tied to retail in the United States of America. And when people report retail numbers, it appears that they're only reporting on a couple firms that are carrying all the weight. So you look at, say, Costco on the food and other product side, then you look at Amazon. Yeah, they're doing good, but if you walk into a lot of brick and mortar stores right now, they're not doing well. And there's a lot of jobs tied to this, and I'm very concerned if that job market starts to depreciate because of the way people are doing commerce, that could have an impact on the marketplace.
Terry, thank you so much for joining me on Futures Radio Show. Enjoy the rest of the conference.
Anthony, thank you for being here, and thank you for having me.
Rick, welcome back to the show.
Thanks for having me.
It's great to speak with you. Now, you just got back from India.
I did.
Talk to us a little bit about that trip.
Yeah, it was a whirlwind trip last week, meeting some clients, but also we've got an office out there that, the last time I was out was probably 2 years ago to visit the folks out there. Now we're close to 20 people. I think it was 2 or 3 folks last time I was there. So a team of primarily engineering It's a great group of folks. The team is growing by leaps and bounds. We just moved into a new office space. But it is an exciting region for us, both from an engineering perspective, but also from a business development perspective.
Very cool. There are a lot of point-and-click traders in India. I don't know too much about it.
There are. I mean, it runs the gamut. There's a large trading community and a growing trading community. You know, I think we look around the broader landscape and we see more contraction than we see growth. But there's a lot of promise in India.
Wow, very cool. Now, just a few weeks ago, Rick, you and I talked about TT possibly getting Bitcoin on the platform, and then lo and behold, just a week later, they announced Bitcoin futures. So it looks like futures are going to be on the platform before Bitcoin.
That would be my guess. I suspect will be day one of CME's futures. We'll be ready and have them on the platform. I think that took us all a little bit off guard. I think we were pegging it probably as 12 months until futures were available. But it's an exciting development for us, nevertheless. It doesn't really change our plans. As when you and I were chatting a few weeks ago, obviously we didn't know that CME was going to be launching, so it was much more of a cash play for us, which is unique for TT for lots of reasons. The biggest being that we've never, with the exception of fixed income and U.S. Treasury markets, we've never really supported a cash FX market or cash platform to begin with. So it's exciting for us. We have a lot of changes to make to be able to. It's as you know, a roughly 24/7 market. So that's unique for us. It's different for us. But I think especially now with an exchange like CME launching futures as soon as they are, it also presents a ton of opportunity with the futures against cash trading opportunities, leveraging a lot of the tools that we build, like auto spreader, like ADL, being able to very easily build and have access to that type of technology across futures and cash is exciting for us.
Yeah, I mean, right when I heard that Bitcoin futures were going to be announced and coming out on CME Group, I immediately thought of you guys at TT having Bitcoin on the platform and now having the ability to trade Bitcoin futures side by side. That's pretty cool.
Yeah.
I don't know anyone else that even has that capability yet.
Yeah, I obviously there's likely in-house and there will be in-house platforms, but in terms of trading platforms, I think I hope and I suspect we'll be first to market to have something like that. And you know, it's one thing to have aggregation capabilities and just a single screen to have access to both of those, but we also think we have a lot to add in terms of the workflows and the tools to really enable and empower traders to trade both futures and the cash. It's exciting.
Yeah, it really is exciting. And one of the really cool features that you guys added on the new TT, I believe, was that ADL, to where people can create algos right there on the platform. It was like a lot of cut and pasting. I'm not someone who's going to be the one who helped someone build an algo, but I've went through the videos, and it seems very comprehensive and somewhat easy for traders to be able to do this. Now, I'm wondering, are you going to be able to create algos between Bitcoin and then Bitcoin futures?
Yeah, absolutely. Any market that you can access via TT, you can access with all the tools that we provide, including ADL.
Yeah, I mean, to me, that's really exciting. I think that brings a whole new wave of of traders into TT.
Yep, that's exciting.
It's been a busy year for TT.
It has.
You guys have added some great features, and one of the features I believe is coming for 2018 is the addition of proprietary indicators. I'm really excited about this because I think there's a lot of traders like myself that have created an indicator and want to put it on your platform. Can you talk to us about the progress of that, and if there's anything else new coming out in 2018 that we should be aware of?
Sure. Custom indicators and in general the ability to for our trading community to be able to create their own interesting analytics on data and plumb it back in through the system and do so not just from a analytics on charts, which is what I think a lot of people think of when they hear that, but also to have that data and those custom analytics inform trading decisions from an algo perspective as well. So the ability to create a custom indicator and have that plumb back into an ADL algo, for instance. So progress is coming along very nicely. I think we've got some interesting ideas around how you'd go about building custom indicators, whether it's from a somewhat scripting language, even using a tool like ADL or using ADL itself. We want to make sure that you don't need a PhD in computer science to be able to build these things and benefit from them. And I think that's probably, it has been a busy year for us, but I think that's probably the theme for next year, which is empowering our traders to leverage vast amounts of data, not just market data, as you tend to think of when you think of custom indicators and analytics, but also leveraging their own trade data. So giving them, extending what we've already got, a product called Trader Analytics, to be able to find insight in their own trading behavior, couple that with market data, and start to really be able to glean insight from their past trading experiences and past trading history, and hopefully inform trading decisions going forward.
I have to say, I have to commend you guys at TT, and you just said it, empowering traders is huge, because this next generation of trading, it's so important for us to be able to build the custom algos that we want, use proprietary indicators, look at our statistics, and to be able to really evaluate ourselves as traders.
Yeah, and it's funny, opportunity comes in some of the strangest places. MiFID being a requirement, MiFID algo stress testing requirement by the end of December, essentially, is forcing our hand to build a very robust set of algo back testing tools and stress testing tools. So, I think MiFID's something that a lot of people are scrambling and stressing out about because just having readiness and making sure you're compliant. But for us, this really falls in line with what we hope next year is about, which is leveraging vast amounts of data to make better decisions, both from an algo perspective and otherwise.
Rick, thank you again so much for coming on Futures Radio Show. Enjoy the rest of your conference.
Thanks, you too.
Hey everyone, I hope you're enjoying the show so far, but I want to pause and thank one of our sponsors, Trading Technologies. I started using TT in the year 2000, and I love it. It is by far the best trading platform I have ever used, and I've tried a lot of them. With TT, you can trade the global markets from virtually anywhere in the world. They are the world's fastest commercially available futures trading platform. I highly suggest you go try out TT, especially because you can try it for free. Just go to tryttnow.com and set up your account. How do you see the future of crypto asset trading?
So it's already been kind of a wild west over the past few years, and that's what I think gets a lot of bad press is various exchanges getting hacked or falling over for whatever reason, and it's still a very similar model to how trading has occurred traditionally, at least for the electronic age. Though, of course, these exchanges in many cases tend to be unregulated, fly-by-night companies that don't have particularly long-standing reputations. And from really the security standpoint, you're creating a huge honeypot when you're moving a lot of these highly liquid crypto assets into the custody of a single entity. No matter how trusted they are, it becomes a huge target for hackers, since if they get in, they can take everything and there's nobody who can, reverse those transactions. So I think long term, what I would really like to see to sort of further the ideals of this space is decentralized exchanges. And so you may start to hear terms being thrown around such as cross-chain atomic swaps. And really what that is a fancy way of saying that we're going to have trustless cryptographic protocols that allow you to do real peer-to-peer trading in real time with other people who want to trade a crypto asset on another blockchain with whatever crypto asset you're currently holding. So I think that a lot of trading will eventually become peer-to-peer trading, such that you will basically be running your own exchange per se, with software on your computer that is automatically going out and doing the matching of orders.
Okay, two questions. What moving averages are you looking at, and what time frame? And secondly, when you do finally get in this trade, I'm assuming you're using futures. And what is your stop? Like, how do you know where all of a sudden you're like, I'm wrong?
Let me go back to the beginning. I keep it very simple. I've been watching the 50, 100-day, and 200-day moving averages since I started in the business, and that's what my eye is trained to watch. I'm really, really keen on seeing, you spoke about time frames, et cetera, but I'm interested in using those moving averages. One of my, 5-star setups that I see occur is when you'll have a security get above its 200-day moving average, which is usually breaking a long-term trend. And you'll see the other moving average, the 50, cross up through the 100, and then both of them cross up through the 200. And that's the sort of price action that gives you a lot of confidence to add onto your positions when you're in a trade, because you get a lot of acceleration when you see that. So that's how I use the moving averages to try to speak to your time frame. I'm still in that time frame where I'm starting off. I'm walking into a position and seeing where it takes me. I feel like you have to start moving money into a position and see how it's treated and see how it feels in order to decide if you want to be in bigger or smaller. I guess lastly, I'm a big trailing stop guy, Anthony. When things are going my way, like sort of say they have now in crude oil, we're above the $50 mark. We're into the mid 50s in Brent. We're now at $57 in D's crude oil. I'm going to start pulling, if tactically trading, I'm going to start pulling my stop up into the low 50s now. It's more like now I want to make sure that WTI stays above the moving averages. It has to continue to make higher lows, and I want to basically be there for the next dip, see where that establishes itself, and put my stop loss below there. This way I'm locking in profits.
Yeah, and I'm wondering, because you look at fundamentals, you have to look at the technical analysis, and you have to look at the price of the dollar. You're ever on the phone with one of your clients and they're saying, "Oh, look, I think we should do this," and you're like, "Hey, I think we should hold off here. We could maybe get a better price, or there's something I think that we should be, we're waiting for." What do you do in those situations?
Well, I'm lucky in the standpoint that I've built some very solid relationships with my customers. I mean, I've been in the industry for 13 years now, and I have some customers that I've worked with all 13. And so we have done that, and I have done it several times. And of course, when you're building that trust, it's a little bit more scary than once you establish the trust, of course, to say, hey, I know that you're antsy. I know that you're worried. I know that every time you turn on the TV or read some sort of market analysis, it's giving you 17 reasons why we have to go lower. But, et cetera, et cetera. These things are factored in. This is what we're watching now. I think this thing's going to turn, or vice versa. I had to call a lot of customers this past summer and say, and we were trading around 398 September futures. The market was up solidly, but in the years past we traded well above that level and had plenty of further opportunities to market our grain beyond just that $3.98, $4. But this year I had to call each and every customer that I had with open grain and say, hey, I think you need to offset some of your risk going into the weekend. I just don't feel comfortable with you having 100 or 200,000 bushel unpriced with rain in the forecast next week or something like that. So yeah, it's definitely, they rely on me to pay attention to all of the little things in the market, and it allows them to go and focus on producing the maximum crop they can produce on their acres.
Bitcoin. A lot of people have opinions about Bitcoin, but you guys have one specifically.
I'm really nervous about this one. I'm nervous about all of these, but we make these calls because even though we're not traders, because we're helping to establish proof, the validation of the methodology. The Bitcoin is a tough one, and we, even though we're very pleased at the price, since a lot of us have been long Bitcoin for a while, Bitcoin and Ethereum, we were looking rather carefully at the digital discussion that underlies these signals, and Sam Lee, who is one of our brightest quant analysts, observed that the nature of the underlying digital discussion in Bitcoin has changed substantially. That back when it was at the $4,000 and $5,000 level, there was a consistent pattern of digital discussions on Bitcoin in our Bitcoin signal, talking about sort of technical aspects of the phenomena, things like blockchain databases and hyperledgers, that kind of stuff. The recent conversation has been, if you will, much more superficial. It appears to be a lot of people, for the first time, trying to explore what is Bitcoin on various blogs and Wikipedia, and even looking at YouTube, from which we infer that there's not as much, if you will, technical support underlying the digital discussion in our Bitcoin signal than there was before, which, it's kind of a leap of faith from that to the assertion that we're likely to see a downtick. But on balance, it's a reasonable assumption to make. We actually are working on a predictive analytics closer study of our Bitcoin signal and moves in Bitcoin, and for that matter in Ethereum. So we'll come out with that probably in another 2 weeks. On the basis of this, I just sold some Bitcoin.
Okay, we're going to talk a little bit more
like
about this.
Like a lot of Bitcoin.
So for all of our crude and refined product traders, besides the upcoming meeting on November 30th, what are some things that you are watching that us as traders should be keeping an eye on?
Okay, I think one factor that's really sort of important is because the crack spread, because margins have been so good, this time of year we normally have maintenance where refineries kind of shut down. They go into like repair mode. They do a lot of work on them, and then they retool the refineries to go into maximum heating oil production mode from gasoline as we kind of move out of gasoline season. However, because of the pretty strong crack spreads, a lot of this seasonal maintenance has been postponed. So that's one of the things that we want to be watching. Also, we want to be watching the daily consumption of, in the EIA reports, the daily demand. The demand numbers that come out on a weekly basis to measure daily consumption. We want to be looking at weather, and how that affects the. It's much less of a, distillates are much less of a source of heating oil or heating than they were at one time. It's like the Northeast and north of New York City is very dependent upon heating oil. But so we watch, rather than gas, but we'll watch the weather too, and that'll be a factor. So, those are some things, OPEC, and also what's going on with some of the other international markets. China has been, demanding a lot of our products. So, or not our products, but European products, and there's increased demand there. So we're going to be looking at that and looking at storage levels in Europe.
Okay, you mentioned interest rate shock, and I know that specifically you're talking about the 10-year going higher from here, the yield. So where do you see 10-year yields going from here?
Well, it's really a perfect storm of bearishness for the bond yield, in other words, for bonds, but for higher yields. You've got a $50, $60, $70 billion stimulus that's coming out of Washington in terms of the storms, Maria, Irma, and Harvey money that's going to be oozing through the economy. You got tax cuts. You got repatriation, trillions of dollars, potentially or hundreds of billions coming back overseas from around the world. And at the same time, this global growth spurt that we've seen this year, global growth is right around 4.5% global GDP, best growth in years, especially out of Europe, Asia, That's all feeding back to the United States. That's why the Dow is doing so well. Companies that sell their products globally are doing the best because the dollar had this big leg down this year. The dollar dropped 11% in 8 months, one of the sharpest drops that we've had, and that's a huge thing. So 11% drop in the dollar in 8 months. Think about the global GDP. It's 80 trillion. It's about 62 trillion of GDP outside the United States, 62 trillion of GDP outside the United States, and 18 trillion in. So U.S. economists are conditioned almost in a, almost in a 1900s colonial psychology where the U.S. is like this important economy. Sure, we're important, but we're 18 trillion of GDP inside the U.S. and 62 trillion outside. So when the dollar drops viciously, the stimulus in the global economy is so much louder than people think and more powerful. And now it's feeding back to the U.S. So in the fourth quarter, you've got all these things coming together, and you've got a high probability, I think, we think as a team, of a rate shock where you could get 3 to 3.5% 10-year bond yields either in the fourth quarter or the first quarter of next year.
To talk about my own personal experience at the beginning of my trading career, I blew through 3 accounts, and it was amazing how I played such good defense until I got to the point where I only had a little bit of money left when I should be playing stronger defense, and it almost just let myself go and blow out because I couldn't take it anymore. I couldn't take the pressure anymore. I noticed that was something that I would continue to do. I would, when I was a lot more money in my account, I felt like I was just such more of a disciplined approach and trader, better decision maker. And when I got into a situation where I had less in my account, I would just blow up, giving up. I was like kind of throwing my hands up in the air and go, please just get me out of the situation. I can't take the pain anymore.
Yeah. So you were disgusted, demoralized, depressed, and you're just like, make it stop.
Exactly. I mean, that's exactly what it was. And it was amazing that I would feel like this relief, and then I would go, and when I started to then I'd have to go and borrow money, which I didn't want to do. And then I'd get back in and I would all of a sudden be perked up and ready to go again. And I'm just like, where was this attitude when I really needed to defend it? And until I started thinking that way all the time, and that's something I didn't learn from a book, I had to learn that from experience. And I finally turned the corner. I know that you have an issue with traditional psychology, as you already mentioned, that there's no decision being made without emotion. Talk to us about that a little bit on why you have an issue with traditional trading psychology.
Well, I mean, if you think about what you just said, I'm sure you were pushing aside the feelings of disgust and demoralization and depression. Like you're like, okay, you weren't really like leaning into those feelings and saying, I feel horrible about this. You're trying to say, okay, be disciplined, do the right thing. Like, you were in your head. So what happens is then you act out the feeling. In contrast, had you been able to bring the disgust front and center, you wouldn't have had to blow the account out, because you would have been able to process the disgust. And then you would have been able to say to yourself, okay, I don't want to blow this account. I don't want to borrow more money. Like, I feel disgusted. And in being able to feel it, it would open up a space for you to say, okay, but what can I do to improve this situation? As opposed to basically having no choice but to blow it out in order to escape the painful feeling. So that's a long-winded way of saying the idea of controlling your emotions hurt you there, because what you needed to do was more ability, and awareness of why, that totally feeling and recognizing your emotions could lead you to a place of being able to do the thing that would have been more effective. So control your emotions, take the emotion out of it, to me, has historically been the bedrock of trading and investing psychology. And you still hear it ad nauseum. So you go back to the fact that if you literally could do that, you couldn't make a decision. But even beyond that, the truth is our feelings and emotions, and particularly our negative ones, in their pure form, and I can explain that, but they are meant to help us. So when you start to feel disgust with your situation, the way that feeling is supposed to work is like you don't want to feel disgusted, right? The disgust is like a signal to say, okay, Anthony, you should be changing something here. But if you think you're just supposed to squash that feeling and use your intellect, you don't get that message as to you're supposed to be changing something. So you don't change something. So the disgust gets bigger and louder and, more unpleasant, and you just want away from it. So you do this thing that gets you away from that feeling. But all along, the feeling could have helped you if you didn't think that you were supposed to control it, set it aside, or it wasn't so unpleasant to feel.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.